Last Friday, Microsoft had a huge drop with about 4%. And if we take a look at the last year, we can see Microsoft stock dropped about 21% from its all-time high. So it's about time to take a closer look at Microsoft, because that's when the stock gets interesting. When times are hard, when the stock is down a bit, that's when I like to invest and analyze the stock. But before we start with our Microsoft analysis, please take a look at this disclaimer. Okay, in this video, we're going to take a quick look at Microsoft and we will try to come up with a fair value. As you know, I'm a long-term investor and I really like free cash flow. I think especially during this recession, companies with a high free cash flow yield will perform well or have at least a high chance of performing well. And that's especially true for companies with a high free cash flow yield and a good sticky business model, reoccurring revenue, and then the cherry on the top would be stock buybacks. And I believe that Microsoft really fits into that category. Okay, let's take a quick look at the financials. It's currently trading at a PE of 24 and a forward PE of 20, which seems reasonable given the growth it had in the past years, and especially now that its business model is more diversified and with the cloud business gaining more and more subscribers, and it's getting a bigger part of the company, and this business is still growing at double-digit numbers. We have also a dividend yield of 1%, which is quite nice. I wouldn't buy Microsoft as a pure dividend stock, but you get a 1% dividend yield, and as they announced on September, you get a 10% increase. So, of course, you have a fast-growing dividend company. We can also see revenue per share. It has been growing steadily for the last 15 years. Earnings per share, it's a little bit more volatile, but you can also see it's growing, and especially in the last years, it's been growing very, very fast. And the same with free cash flow. It's also perfectly growing. Yeah, market cap is 1.7 trillion, which is already very big, but I believe Microsoft can grow a little bit bigger. Also, one thing to mention about Microsoft stock buybacks, they are doing huge buybacks, not as huge as Alphabet in terms of the buyback yield, but it's pretty huge. I think it's a buyback yield of a little bit under 1%, but together with the dividend, it's quite nice. Before we try to come up with a fair value, let's take a quick look at the last quarter. Although they had some headwinds with currency, because the dollar is very strong right now, it's still been pretty good growth. You can see 12% year over year, and also operating income grew 8%, which is quite nice. And what I really liked is to see that nearly every product, and you can see that Microsoft has a lot of products, grew double digits. There are 3 or 4 exceptions, but in general you can see that the whole company is growing. And especially what I really liked is LinkedIn and Azure. It's getting more and more important for a company. I really believe in the cloud business, and to see this growing with over 40%, that's just amazing. Okay, now we have an understanding of Microsoft company and its growth values. Let's get into valuation. Okay, if we take a look at the last years, we can see, including the forecasts for the next years, we can see that Microsoft is supposed to grow in revenue with about 15% and free cash flow with about 17%. You can also see the number of shares has been steadily declining. Currently, this rate is roughly 1%, a little bit below 1%. I've adjusted the share price. It's currently $234. And let's take a look at our investment scenarios. I think given the revenue growth with about 15%, it seems reasonable to start with a free cash flow growth of 17%, as it has been in the past, and then constantly lower it. Maybe we can be a bit more conservative and take it all down 1%. But I think the cloud business is really going to be a growth driver for Microsoft, and it will really help the business have high double-digit growth rates. A fair cash flow yield of 5.5% is maybe a bit too high. Let's put it on 5%. And for the best case, 22%. It's optimistic, but I think it's achievable. Then the fair free cash flow yield should be around 4%. And the worst case, maybe we can get a little bit more conservative with the worst case. We have seen in the past quarter, we were at 12%. So then let's start with 12%, maybe even a little bit lower, 11%, 10%, 9%, 8%, 7%, and a 6% fair free cash flow yield. And then we still get an internal rate of return of around 7.8%. Of course, the best case scenario looks really good, but we have no guarantee that this is really going to happen. The normal case scenario looks like a very healthy return, 12% internal rate of return, and that for a well-diversified company with a great business model, high free cash flow, low debt. That's exactly what we want to see. Yeah, and the combined result, 12.5% internal rate of return. This seems very reasonable for a high-quality company like Microsoft. And maybe I will take some time, think about it, and do a little bit more research, but then there's a higher probability that I'm going to invest into Microsoft stock. Thanks for watching. If you want to see more stock analysis videos like this, feel free to subscribe and leave a comment.